Looks like we made it. It's finally Friday. I say finally, I'm not quite sure where the week's gone, but it is the morning blast with myself and Mr. Michael Brown, where we will be jumpstarting your trading day with a review of yesterday, a preview of today. But before we do, I'll get the legals out the way. Nothing discussed in the space of session, constitute trading or investment advice, yada, 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 or infers any kind of endorsement, yada, 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 by PIQ, myself, or Mr. Michael Brown.
Very good morning to you, Ryan. Good morning, everyone, and very happy Friday, of course. As you say,
Can
we
you
find. Oh,
can you
go on.
tell can you tell that I've had a few coffees this morning?
Oh no.
And,
Oh
and you've
no.
got the pleasure of my company later on.
Oh, do you know what? I'm washing my hair. What's left of
Oh,
it?
what, both of them? Hey, and we're off.
Oh God. If anyone else would like to co-host the morning blast this morning, then please feel free. Anyone got Zach's number?
Well, I'm still waiting for Zach to post the overnight news roundup, so I'm stalling for time.
Yeah, I did notice he's been slacking off this morning, hasn't he, young Zach? Disgraceful behaviour. Well, you'll be pleased to know that I haven't been slacking off. I've got plenty
Go
to
for it.
talk about. So let's get into that. In terms of markets, the risk rally rolling on yesterday. The S&P
Yeah,
up by about 0.5%, the Nasdaq up 1%. Interestingly, the S&P 500, the Nasdaq 100, the small cap Russell 2000, and the aging and long overdue for retirement Dow Industrial Average all closed at record highs yesterday. Now, I
can't
haven't
stop,
done
won't stop.
well, quite. I haven't done the stats on when that last happened, but I would imagine it is quite a long time ago. That, of course, as markets continue to digest the FOMC decision from Wednesday, the Fed looking to really front load policy easing, leaning in to support the labour market, support the US economy, which is naturally a pretty bullish catalyst for risk, as we see. Although markets elsewhere, it was a little bit of a day of two halves, really. Early on, we had that sort of dovish reaction continuing in the Treasury complex and in the FX space. But then that sort of gave way to some notable dollar strength as the afternoon wore on, and also some notable downside in Treasuries as well, with a 10-year yield ending the day about 2 basis points higher at 4.1%, and trading another 2 or 3 basis points higher in early trade this morning. In terms of catalysts from yesterday, in the last 24 hours, there is quite a lot to get through. We may as well start
Thank God
on
for that, because
the...
he's still not posted the overnight news roundup. Take
Zach,
your
hurry
time,
up.
mate. Take your time.
On the policy front, we've had 3 G10 central bank decisions over the last day or so. The Norges Bank delivering a 25 basis point rate cut as expected, lowering their cash rate to 4%, although that was a very hawkish cut, with the Norges Bank noting that a somewhat higher rate is needed compared to the outlook that they provided in June, and signalling that they will deliver 1 25 basis point cut per year over the next 3 years, with the next cut not likely to be delivered until the middle of 2026. So considerably more hawkish than expected, and also considerably more hawkish than we see from a lot of their other G10 peers. Moving on to the Bank of England, the BoE's Monetary Policy Committee left bank rate unchanged at 4% at the conclusion of the September meeting, as expected. That was not a unanimous decision. It was a 7-2 vote with, again, as expected, external MPC members Dingra and Taylor dissenting in favour of a 25 basis point cut. Within the statement, the guidance pretty much remained unchanged from that the bank issued last time out, repeating a gradual and careful approach to further policy easing, reiterating a data-dependent approach, and also repeating that policy is not on any sort of preset path. The other thing from the BoE, of course, was what they're doing in terms of quantitative tightening, the speed at which they're going to reduce the size of their balance sheet over the next 12 months. On that front, the Bank of England trimming the overall size of balance sheet reduction to £70 billion over the next year. That's down from a prior £100 billion. Now, this is going to be comprised of £49 billion worth of maturing gilts that are just going to roll off naturally, and active sales of £21 billion, which is higher.
Can I just just warn the listeners that there is a quiz at the end, so make sure you're taking notes.
The reason I'm going into the weeds a little bit on this one is because the active sales component is where the BoE have made a
Yes.
very pragmatic decision, which is that they are going to reduce sales of long dated securities 20 years plus, and they will account for no more than 20% of the total amount of gilts that they sell over the next year. This is very much the BoE, in a similar manner to the DMO actually recently, recognizing that the long end of the gilt curve is very, very fragile, to say the least.
Yeah.
The absolute last thing that
What a day to
30-year
say
gilts.
that.
Well, yeah, I was going to get onto that in a bit. The absolute last thing that the 30-year gilt needs right now is more supply coming into the market.
Yeah.
So absolutely the right thing for the BoE to do. All of this very much in line with expectations. Governor Bailey saying that the timing and scale of cuts is more uncertain than before August, but the market pricing of a wait and see approach, as he called it, is correct. All of this pretty much bang in line with expectations. Again, focus for the BoE is really on the September CPI numbers that we get on the 22nd of October,
Yeah.
namely whether that comes in above or below their 4% expectation. And moving away from the BoE into the Bank of Japan, they kept rates unchanged as well overnight at 0.5% in also a 7-2 vote, but this time with two dissenters for a 25 basis point hike. The big takeaway from the BoJ decision is that they are going to start to sell down their securities holdings, their
And how
ETF.
long will this take?
Well, I was going to get onto that. And their real estate investment trust holdings, they're going to sell these down at a pace of about 330 billion yen per year. Which you go, wow, that's a big number. Well, one, it's in yen, and two, they've got 70 trillion yen of this stuff to sell off. Governor Ueda at his post-meeting press conference saying that at the current pace, it would take 100 years for them to get their ETF holdings to zero. So
I
clearly
mean,
not in much of a rush on that front.
well, this is the thing, right? They could be in a genuine rush, but they just own so much of it that, yeah. What else are you gonna do? Tell you what, whoever's got this long-term brokerage agreement for them, they've had a right touch.
I think long BlackRock might be the trade
Yeah.
with that one.
The
If it is,
sack,
it normally is.
the Saki's on them.
Exactly. Where else should we go? That's all the policy decisions. We have had some economic data as well. Initial jobless claims coming down to 231,000 in the week to the 13th of September, down from the prior 263. Of course, this coincides with the September non-farm payroll survey week. The reason for this big decline is because the prior week, the increase was driven by a surge of fraudulent claims in Texas. When you dig into the data, claims in
Yeah.
Texas, oh God. Claims in Texas are still about 10,000 above the 4-week moving average from the period when before these fraud allegations surfaced. So I do think that there might still be a little bit of skew in that jobless claims data. Also this morning, we alluded to this a moment ago. We've had some data out of the UK. Retail sales rising by 0.5% on a month-on-month basis in August. Excluding fuel, sales were up by 0.8% month-on-month. Basically, this is because the weather was quite nice and people went out and spent. Although we are likely to see those figures revised down at some point. That very much seems to be the trend in terms of retail sales here in the UK at the moment. Of much more importance, though, is the latest government borrowing data.
Yes.
The budget deficit at 18 billion in August, which is, I think the consensus was for about 12 billion. That is one of the highest
13.
August.
It's
Was it 13?
12.8. Well, 12.8. So, yeah, cool. Well, on Reuters anyway.
Do you know what? I was just going, why is it not on my Bloomy calendar? And I could have just scrolled up and it suddenly appeared. So things are going brilliantly over here. And you are
Oh,
right. It
get us
was
down the pub. Get us
12.8.
down the pub.
The other takeaway from this is in the 5 months to August, of course, the UK fiscal year starts in April. Government borrowing in the first 5 months of the fiscal year is now at 83.8 billion. That is excluding the COVID year, the highest figure ever at this stage in a financial year.
It's ridiculous.
Of course, this comes ahead of the budget on the 26th of November, which is getting more grim by the day at this point. Unsurprisingly, markets taking that rather poorly. We've seen a sell-off at the long end of the gilt curve, the 30-year yield back above 5.55% this morning, and also cable taking a bit of a knock as well, trading below the 135 figure.
Just
In terms of Oh,
Sorry,
go on.
just on this, I've just shared it up in the Jumbotron. I can never remember what we're meant to call it, but up in the top. So, a good post from Simon French, which basically been tracking total borrowing, current borrowing. Um, and, and I've kind of highlighted with my repost of it, the time just leading up to the election, or COVID leading up to the election, then when the 2024 election happened. And
Oh, that's a brilliant chart, actually. Yeah.
if we remember, Starmer and Reeves came in saying they're going to, quote, fix the UK's finances and plug the gap and, fill this black hole. But if you look, they actually inherited quite a strong trend in terms of UK finances. We were slowly
Mm.
getting back after kind of the recovery off of COVID, a bit of a wobble, where, everything's normalizing, but it was quite, a decent, on a decent course back to normality. And that was basically the peak since they've taken over. It's literally everything's got worse. Almost every month has got worse and worse. I think this just shows you how asleep at the wheel. Well, potentially Reeves isn't asleep at the wheel. She doesn't even know what way to face when she's holding the wheel. That's the problem. It's absolute shower of shit.
Well, there we go. Very eloquently put, Ryan.
As always, mate. You know me. I'm a working man's market analyst. You fatty what?
I'm not sure working man applies to you.
Steady. Right, move on. I'm still waiting for Zach, by the way. You better hurry up.
Yeah, working man doesn't apply to him. He's probably on holiday again.
True.
While we do wait for Zach, I do have other things to mention,
Good.
because there were a few headlines on the trade front yesterday. The Supreme Court has said that they are going to hear oral arguments in Trump's tariff case. This is the IEEPA lawsuit. That's going to take place on the 5th of November, so a bit of a date for the diary there. Another one for the diary is this call between President Trump and President Xi of China. That is due to take place at 9 o'clock this morning Eastern time in the United States, 2 o'clock this afternoon here in London. This is, of course, likely to focus on the TikTok sale that was agreed earlier in the week. Trump was also giving a press conference yesterday here in the UK, actually, and he said, and I quote, "We may do an extension with China." But I would swap may for will on
Yeah.
that one. And of course, do remember there are only 13 more 90-day extensions until the end of President Trump's second term. Speaking of Trump, he has also asked the Supreme Court to let him fire Fed Governor Lisa Cook, very much in line with expectations. Lisa Cook has also filed a suit to say, no, he shouldn't be allowed to fire me. And at some point, the Supreme Court are going to have to rule on that. But for the time being, Lisa Cook remains a Fed governor and remains on the FOMC. In terms of corporate news, a few bits and bobs on that front. The biggest headline, of course, is Nvidia. They are going to be buying, or they have bought, I think, a $5 billion stake in Intel. This is a new partnership that the two firms are putting together. The two companies are going to jointly develop chips for PC and data centers, but the deal does not include an agreement for Intel to manufacture chips for Nvidia. Intel shares rallied by well over 30% pre-market on the back of that news. Tom Talks Cars did do a very good job of trying to explain to me why they're doing this, but to be honest, I've forgotten it all. It is on his Twitter somewhere if you are interested. Other bits and bobs of corporate news. Meta, apparently they have been approaching various companies in the media space about licensing their articles for AI. Of course, one of the things that AI needs in order to be trained and learn what to do is content. And a lot of these AI firms, OpenAI, whoever, have been taking this from Reddit or Twitter or God knows wherever else. Meta are looking to actually get a little bit more professional on that front and take articles from companies like News Corp, who obviously own the Wall Street Journal and all the rest of it. Moving on from that, the FTC in the United States, they are suing some ticketing firms, Live Nation and Ticketmaster. Apparently they've been engaging in illegal ticket resale tactics and deceiving artists and consumers about price and ticket limits. I think this relates to the whole dynamic pricing issue that everyone's been complaining about recently. The Japanese bank that owns a stake in Jeffries, whose name I don't really want to try and pronounce, Sumitomo Mitsui, they are looking to raise their stake in Jeffries above the current 15% that they own. And last but by no means least from me this morning, a very interesting article in the Wall Street Journal this morning with the chief financial officer of Pony AI. He says that Pony AI is going to hit their key profit target by early 2026, and that Pony AI will be rolling out 1,000 robo-taxis globally by year end. So it looks like their fortunes continue to gallop higher.
Oh, brilliant stuff, brilliant stuff. And nothing from Zach, so I'm going to use the...
Oh no!
Fuck!
Oh God!
Right, does anyone know any good jokes? Right, I have got a prelim one that he did send me as a backup earlier on, so I'll go through that. So as usual, I'll be reading out some very, very selected headlines from the overnight news roundup as we wait for Zach to finish this off. Fair play to Zach, it's because the Bank of Japan have been speaking all morning and he's been sorting that out. So we'll be on the
Nah,
stuff,
that's
Zach.
nah.
Well,
The,
that's his excuse, and he's sticking with it.
shit
The
excuse.
Substack will be going out very shortly, so do keep an eye on that. But anyway, as Michael's already covered, the Bank of Japan, so I don't need to go through that. Japanese political uncertainty spooks foreign investors. The LDP leadership candidate, Sanai Takashi, I think so. I'm gonna say that differently every day until one day I get it right. Currently in second place in terms of betting markets, promised tax credits, lower income tax, and cash payments if she wins the race. I would consider that basically trying to buy votes, but more power to her. Notably avoiding any mention of monetary policy in her proposals. Foreign investors heavily pulled out of Japanese stocks in the week through September 13th, turning cautious over potential political risks from Shiba's resignation. That's according to Bloomberg and Reuters. Trump's $550 billion manufacturing gambit takes shape. Trump's team is weighing a plan to spur factory construction and infrastructure development to jumpstart American manufacturing. The administration would use the money from $550 billion investment fund established with Japan to invest in semiconductors, pharmaceuticals, critical minerals, energy, ships, and quantum computing developments. It's gone to Wall Street Journal. The UK budget woes, mounted borrowing surges. We've kind of covered that, Michael and myself already at length. The deterioration obviously driven by spending on public services, welfare benefits, debt interest, etc., etc. As our dear friend Tom mentioned just now on X to me, you could kind of cut some slack if they were spending this on infrastructure or stuff that's going to last. But this is just dead money as soon as they've spent it, basically, which is just very, very depressing.
Yeah.
Retail sales, though, they did grow stronger than expected in August, suggesting households are shaken off Labour's tax increase impact. I do wonder what the Oasis impact was on this. I haven't seen, but Oasis gigs were in August. So I would be shocked if they didn't have some notable impact. Goldman,
Yeah, someone with more desire and intelligence than us can go and find that out, I think.
Uh, you let me down there, my friend. You let me down. Anyway, I was trying to think of a quick Oasis song for a pun, but I panicked. Anyway,
It's all
Gold.
right. Just don't look back in anger about it.
Ah, you bastard. Oh no. I don't know. I don't think I'm ever going to recover from this. Okay, pint on me. You get a pint on me for that one. Goldman scraps BoE cut expectations. Goldman Sachs no longer expects Bank of England rate cuts in 2025, pushing back its forecast from November to February 2026. This is followed by quarterly cuts to a 3% terminal rate by end of 2026. British confidence levels, they've turned more gloomy this month. No surprise there, with November's budget
Yeah.
tax increases threatening to damage sentiment further. I'll give you a clue. They will damage sentiment further. Geopolitical news, we'll just pretend that doesn't exist at the moment because that was one of the portions that Zach missed out. Equities, before I hand back to the big man. FedEx sees through the tariff storm. FedEx reinstated its full-year profit outlook, signaling the company's gaining clarity on its business future despite ongoing tariff pressures, while earnings came in just beneath expectations. The company's 6% revenue growth guidance significantly exceeded consensus, which was a meager 1.2%. This obviously suggests resilient demand in the logistics sector. Speaking of logistics sector consolidation hits a roadblock. United Parcel Services terminated its plans to acquire Mexican small package provider Estafeta, abandoning a more than, I like saying that word, Estafeta, abandoning a more than a year-long acquisition effort. That the decision reflects the challenging regulatory and operational environment for cross-border logistics consolidation. And finally, from me, obviously autonomous driving, economics near break-even, Pony AI, everyone's favourite, our show's favourite AI, the CFO, well on track, as Michael just said, targeting key profitability by late 2025 or early 2026, driven by fleet expansion and user growth. I promise you, anyone wondering, if the FCA or whatever they're called these days is listening in, we are not sponsored by Pony AI. We only like Pony AI because pony is another word for shit. And that's the basis of our investment thesis. Thank you for listening. Back
And
to you in
also,
the studio. Go on.
may I stress too, Mr. Regulator, if you are listening, very good morning. We also have no skin in the game whatsoever,
No, we
which is
don't.
rather annoying because since we first mentioned them on the Morning Blast, they are now 150% higher.
Oh God. Yeah. Anyway, so if we were insider trading or whatever, we're doing it very badly. If that helps.
Yeah, we're doing it terribly.
But anyway, back to you in the studio.
Oh dear. Right. Where are we today?
I
There's
don't
actually
know.
not too much. No, nor do I at this point. There's actually
What
not too
year
much
is
on
this?
the, God knows. There's actually not too much on the economic docket today, to be completely honest with you, Dee. Now that the Bank of Japan and all of that UK data is out of the way, the only notable release this afternoon comes out of Canada. That is the latest retail sales data. Sales set to have fallen by 0.8% on a month-on-month basis in July. That would be quite a steep slowing, actually, from the 1.5% increase that we saw in June. Other bits and bobs to keep an eye on. Of course, we do have this phone call between President Trump and President Xi, but to be completely honest, I would not hold your breath for any major or significant developments to come from that. The Fed blackout period is coming to an end today. Fed 2027 voter Mary Daly. She is going to be speaking at 7:30 this evening. Absolutely no chance I'm hanging around for that. We are also due to hear from Trump puppet Steve Moran quite a lot throughout the day. He's going to be on CNBC and on Fox later on, but it's also customary for a Fed governor to issue a statement explaining their dissent. So you would expect to get that from Moran, usually around sort of 12:30, 1 o'clock in the afternoon, London time. And that is pretty much it. Of course, the usual reminder to be aware of the potential for gapping risk over the weekend if we're going to need trade or geopolitical headlines. But frankly, it's been an incredibly long week. I think everyone in financial markets is absolutely shattered and will be looking to head for the exit doors as rapidly as they possibly can today.
Exit out the office, enter into the pub. Michael Brown, Mr.
Some of
Michael
us haven't
Brown.
even entered the office.
I can't talk either. Well, welcome home, you know what I mean? But Mr. Michael Brown, thank you so much as always. Beer on me later on today when we meet up. Listeners, thank you so much for tuning in today and this week, especially our regular listeners. We know who you are. We really do appreciate you. Yeah, whatever you're doing this weekend, keep it tight, stay safe, and we'll see you all on Monday morning, bright and early. Much love.
Indeed. Good weekend. Bye for now.